Hey guys, this is Daneng and welcome to this video. What I want to do here on this video is just share with you some of the things that I've learned along the way. I've been with iMarkets Live for a little bit over a month and a half now. And like many of you, probably started during the time when we had that little promotion of getting in for only $1 or something like that. And so if you stuck around this long, then that is telling me that you are serious about trading, you are serious about changing your life. And so what this video is, the goal of this video is to help you stay in the game and, help you control your frustration when it comes to trading. And for the most part, if you're anything like me, at this point in time, you're probably very frustrated at how your results have been when it comes to trading. And there's a couple things I'm going to go over that will be able to help you with that frustration. And, a lot of this stuff I just learned over the last month, through countless hours of studying and reading and watching videos and all that. Okay. So I want to go ahead and share those things with you. And I titled this how to not be frustrated when trading and stay in the game. All right. So first and foremost, I want you to understand that Forex trading is not magic. Sorry about that. Forex trading is not magic. It is math, okay? And it is a game of probability, okay? So nobody can really actually predict how the market's going to go, up or down. All that stuff really does not matter. The market's going to do whatever it will. And in a sense, it is like gambling, but you are not gambling. Okay? So let me explain what I mean by that. It is like gambling in a sense because you don't know, and it is a game of probabilities. However, you're not gambling because you can have the probabilities on your side. So for instance, if you walk into a casino and you place a bet, you are gambling, okay? But the casino owners, do you think they're gambling? No. These guys are business owners. They are not gambling. So because they know the probabilities, and all it takes is just a large size of sample size. Basically, with all the bets combined, they know that they're going to have this ratio of losses to wins. The only thing that they have that they know is that they have an edge over the gamblers. And it's that edge that makes the casinos millions per month. And so with Forex, you are like the casino owner. You have that probability on your side, and those probability has to do with the technical analysis. So let me go ahead and put in number 1. You have to realize that this is a game of probabilities. Stop trying to be right. Stop trying to don't kick yourself for losing trades because it's gonna happen. Okay? It's a game of probabilities, but what we're gonna do is put the probabilities on your side. Okay? So how do we get the probabilities on your side? You have to understand technical analysis. And what that has to do is A, no support, B, no resistance, and pretty much you just use this, the support and resistance, to have the probabilities on your side. When the market is low, close to support, you want to buy. When it's close to resistance, you want to sell, okay? Because that puts the risk and rewards on the risk. It minimizes the risk and it maximizes the rewards on your end. Okay, so let me go ahead and give you an example here. So I'm using TradingView, and any of you can go on here and use it too. It's a free tool. It's just tradingview.com. And so basically, here's what I'm looking at here is gold, okay? XAUUSD. So basically, I have my trend lines here, okay? And as you can see, it's trending bullish right now, okay? Right here. And so what you want to do is, you know that this trend line becomes a support, and this trend line becomes a resistance. And so as you can see, it kind of like goes up here to the resistance area. It'll come back down here to the support. It'll go back up here to the resistance area, and then it'll come back down here to the support area. So when it gets to the support, if you already drew this trend line, then you will know that this is the support. And then when it gets here, you can buy. You can do a buy right here, okay? Because you already drew this trend line. Now, yes, you have to understand how to draw these trend lines, and it's not that hard. It's just connecting one point and just following it through to another point, okay? And of course, you got your horizontal resistance and support areas too, that you have to understand and know. But basically, all it is that you just put down your support at the lowest point. I mean, I should do one down here too. Here, oops. Got to do this, horizontal line, support right here. I like the blue. Okay, so you have to kind of know how to draw these lines, but it's very simple, guys. Just put it at the very lowest point and at the very highest point of 2 points touching each other, okay? And then your trend lines, again, just draw it from one point to another that's kind of touching, or just make it kind of like, you know, this is just so that you can identify how the trend is moving, okay? And you always want to, if you're going to play the trend line, then you want to keep it within the trend line. Otherwise, just follow the trend when you are placing trades. So for instance here, what I would do here, as it drops and it gets close to this trend line right here, I know that this is the trend, so I would place a buy right here. So why would I do that? Here's the thing. I would place a buy right here, and then I would just put a stop loss right around this area. So a buy right here and a stop loss right here. So that's about, you know, just a couple pips, okay? So you're losing a couple pips, but you see how your reward is. It's actually a lot higher, okay? Because potentially it could go up, way up high right here, okay? So you want to do the loss, you want to minimize your loss, and at the same time, you want to maximize your reward. And the only way to do that is to place your trades at closest to support, and also as closest, if you're doing a sell, closest to resistance. Okay, because if it breaks through this, it'll hit my stop loss. I don't want it to go further than that. Okay, and it's okay. You know, I have absolutely no pride at all to say when I'm wrong. You know, if I place a trade and it goes and it's wrong, you know, hey, I was wrong. Not a big deal, okay? And you got to think of it with that mentality. You are not like some fortune teller that can see into the future what's going to happen. And nobody is. The market will just do whatever it wants, except that you have these technical analysis tools to be able to help you identify and put the probabilities on your side. Okay? It's not about being right or wrong. It's just about playing the numbers game so that you can come out on top, because you have that little edge. just like the casino has an edge on all the gamblers. All right. So, um, yeah, and then as you can see right here, okay, as you notice right here, this breaks through support. And you want to know why I'm telling you that you should place your stop loss right below this trend line, which is acting as support for this trend, is because when it breaks through support, who knows what's going to happen? And guess what? It started to just shoot down all the way down here, okay? So it's very dangerous once when it breaks through support or resistance up here. For instance, if you are in a buy, and it breaks through this resistance, then you're going to be a pretty happy camper because most of the time it'll go up much higher, okay, from that point on. Or if you're doing a sell order up here, then what you will want to do is place a stop loss right up here above the resistance area, because you don't want it to break through here. If you're on a sell order, you're expecting it to go back down, but if it breaks through this resistance, then most likely it's going to shoot back up, and you don't want that to happen. So just go ahead and minimize your loss and place that there, okay? And many people, you can't just don't look at this like, again, just take away all your pride. Stop thinking that you want to be right. You're going to lose so much money having that pride in thinking that you're right, and you want to hold on to a trade to make sure that you're right. Okay? I have team members, that would tell me things like, I just know it's going to go back up. I know it's just going to go back up. You don't know it's going to go back up. The only thing that you can do is minimize your loss and maximize your rewards by, again, placing buy orders close to support and placing sell orders close to resistance. Okay, so let's go to another example. Now this is EUR USD. Okay, and so this is kind of like my graph, and you notice I have notes all over the place on this graph. You see that? You notice right here, this blue line right here, this is my trend line of it going down. This is another trend line going down, okay? Because overall, the market, that's kind of how it looks like on the bigger picture, okay? So I just know, okay, it went down here, it bounces back up. And so I made a note to myself, okay, this blue shaded area is actually like a consolidation area. So you know why it's kind of going out like this, but I put a note to myself, look to do a sell when it hits resistance. Okay, so it's gonna close right here. Boom. You see that? Boom. It went all the way right up here. This is like my 1 hour resistance horizontal line, and it's also getting up to my my bearish trend line here. So this is a strong resistance area. And so as you can see, if you did a sell, you held it, it drops back down. Goes down here. I have another note from a couple days ago that says look to buy when it hits support. So you buy right here, and then yes, it kind of goes up and up and up, okay? And then it gets to like this point right here. Now this right here, and as you can see, I put divergence here because there's certain things, such as the oscillators here, the indicators that will be able to help you identify, things like divergence and stuff like that. But I'm not going to go over that right now. But basically, what this is just telling me is that this is going to go up. Okay, so from this point on, even though this is showing like a lower high, the RSI is showing like a higher high. Okay, so that's why I have a good indication that it's going to go up. So if you bought right here, then you're good to go. You would have made some money right here, and then you notice right here it's breaking through my resistance area. Okay, it's going all the way up here, and as what you can do is you can also do you could chart it with that the harmonic scanner thing, point A to point B to point C to point D. And so what this is looking like to me, because it already broke through my resistance area, okay, for the most part, it should be dropping, okay? And so it's just a matter of time. Basically, there's certain strategies on what you should do to enter the market. What I do is I look at the five minute chart and also the 1 minute chart, and then I look at the candle, look at the candle reversal patterns before I enter. However, again, I'm not going to go too much into that, but basically at this point, yeah, I would probably do a sell at this point, okay, and and I and who knows? We'll just see. We'll just see what happens. Okay, I'm doing this on June. This video is on June 1st. The time is 12:11. Let's just see what happens. Okay, let's just see if it drops. But and if it doesn't, you know what? Hey, I don't. It doesn't matter to me. Again, like I said, the problem that so many people are having, why they're so emotionally attached to a trade, is because they keep on thinking, they keep on wanting to be right all the time. Okay, you're not going to be right all the time, and it's okay when you make a mistake. It's okay when you call out a trade and it doesn't go your way. Okay, you got to emotionally just detach yourself from that. Understand that all it is just a game of probabilities. What you need to control, the only thing you need to control is get the probabilities on your side, having more wins than losses by, again, placing your buys close to support and placing your sells close to resistance. Okay, so let me see here. So we talked about, okay, game of probabilities, support resistance, candlestick, okay. Candlestick reversal patterns. And then the other thing you have to just understand is just look up some of the candlestick reversal patterns. I have some of them right here. You could just Google it, okay? This is just Google, and I just clicked on image, and it pops up all these candlestick patterns, and you just kind of look through these things, and so you kind of know what these are doing. Like, for instance, this morning doji star here. One bullish candlestick with a small little doji, and a small little bullish candle that's about halfway through this bearish stick signifies there's going to be reversal from a downtrend to an uptrend. Okay, so all you got to do is find these, study, and you don't have to know all of these, but just know a couple of them so that when you're looking at the charts, you'll kind of understand and know what's going on. Such as, for instance, if I'm looking to enter the market. Let's say, I want to sell this. So I'm looking to enter the market. I go over to my 5-minute chart, okay? I'm going over to my 5-minute chart. I'm seeing these little, I'm seeing this. I'm not really seeing much of a sell yet. We'll see what happens in the next, maybe a next like 10-15 minutes, and see if we have like another bearish movement here. Okay, and again, you don't have to be so precise, but this is more like getting into like really really precise entries, so that you have the very little minimum drawback. Okay, a lot of times, if you're not looking at this stuff, you get into the market and there's this huge drawback, and if you're playing with a bigger lot size than your account can handle, it'll probably knock you out of the trade before the trade even goes your way. So this is to help you so that you can have a better entry, and also If you understand and study these candle charts, it's going to help you so that, yes, you can have a better entry and also have experience a smaller drawback when it comes to trading. Okay, so you know, trading. A lot of people have been able to change their lives and be able to live the freedom that they want through trading. And I'm no different. I want to have that type of lifestyle. I really don't want to continue having to build businesses over and over again. Okay. And I believe that this is going to be able to help you with that. Whether it is that you want to change your life by quitting your job, or maybe you're a network marketer and you're tired of having to build teams over and over again when companies crash on you and you're left with nothing. Okay, when you learn this stuff, I believe that that's it. This, you no longer have to depend on business opportunities. You no longer have to depend on your job. You can just make money on your own. Okay, and this is the thing that drew me to this forex trading. And so I'm going to be in the game for a long time because, I understand that it is just a game of probabilities. It doesn't affect me whether or not I win or lose. And I have no pride when it comes to losing. I'll say, yeah, okay, I thought it was going to go up, but it actually went down. No big deal. Okay. And just understanding some technical analysis, support and resistance, drawing your trend lines, knowing understanding how to use some of the indicators, and knowing a couple candlestick reversal patterns.